Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first, I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is essentially what hedge funds and the big players in the market are doing and how they're moving and shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. Now, starting here from the monthly time frame, what we can see is that at the moment we have a market which is rejecting to the upside a quite strong historical monthly support and demand area. In fact, from here, this level has been acting as resistance in multiple occasions. We can see starting from here, we had a first rejection to the downside, then another one, then yet another one. And then with this impulse, the market broke above the level. And what we know in the market is that when there is a previous level of structure resistance and the market is respecting the level as resistance, especially if it has respected the level as resistance in multiple occasions, so that strengthens that level of resistance. Once the market breaks above it, at that point, all the previous resistance becomes support. And at that point, what you would expect is for the market to go and test the level and reject it to the upside. So essentially to go for a retest of the previous resistance turned support. And that is exactly what happened here. We had the break to the upside, the market then went and retested the previous resistance turned support and is currently in the process of rejecting it to the upside. We can also notice how a clear uptrend has been developing. In fact, when you have an uptrend, you expect the market to create a series of higher highs and higher lows. So every time the market to create new higher highs and higher lows. And we can see how we had a first new higher high here, then higher low, then yet another higher high. And now it seems like the market has created another higher low. And the next logical step would be to see a potential rejection to the upside. Dropping down on the weekly time frame, what do we see? Now, from a weekly perspective as well, we can notice how the market has been creating higher lows. So every time new buyers have been stepping into the market, every time we had a correction and essentially trying to protect this uptrend. This means that there is definitely the possibility that we're currently seeing institutional buying, which are and institutions essentially buying up every time that the market is showing a correction and lower prices, therefore creating these higher lows and potentially pushing the price higher. However, at the same time, we can also notice how there is a horizontal structure around this area. We can notice, in fact, how this previous level of support, this is the previous low from which this move to the upside started. Then again here, the market tested its zone and respected it as support. Again here, at the moment the market is testing the same area, has already started rejecting it to the upside. So more bullish price action could be created away from this zone. Dropping down on the daily time frame, what do we see? Now, from a daily perspective, the situation is quite clear. We can notice how the market has just broken structure to the upside. This area was acting as previous daily resistance from which these rejections to the downside started. Now, the market broke above that zone. So all this previous resistance, now that the market has broken into the upside, is turned support here. So what we could expect is a potential retest of this previous resistance turned support. If you also remember, I spoke about gold just a few days ago after the market created this M pattern and explained all the reasons for which after this M pattern there was a good probability of seeing a potential rejection to the upside, which is in fact exactly what the market just did. And by the way, I will link in the description that previous analysis so you can go and check it out for more free education. Now, in a situation like this where the market has broken structure and there's a good probability for a retest, this usually means that there is also a good probability to see some more institutional longing instead of this area, which at that point could potentially push price higher. Now, speaking about institutional longing, let's go and see what we have when it comes to the commitment of traders, so what the big players in the market are doing. Now, if we look at the data precisely for gold, what we can see is that with the last reports, net positions have been increased. We went from 234K to 247K net positions. And in the long term, we can see how we're still sitting with a huge amount of longs compared to shorts from an institutional perspective on gold, with 289K longs compared to only 41K shorts. So there is no surprise that in fact in the long term the price has been steadily increasing, because institutions clearly have been adding a massive amount of longs and decreasing their shorts, leading to the current positioning of 289K longs with only 41K shorts. So let's keep all of this in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in description, so you never miss new updates. Now back to the analysis. So in a situation like this, as the market has broken above structure, if we will see a correction to this zone, the first thing we have to keep in mind is that if we have an impulse and we want to measure the correction, we have to take our Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 0.32, 50% and 0.618 Fibonacci retracements all lining up around this area. Now, since this is also previous horizontal resistance turn support, this actually means that we have confluence of support around this zone. So we have both the horizontal structure and the Fibonacci levels both lining up in this area. And usually when there is confluence of support, there is an increased probability of seeing more institutional longing, which at that point could further increase the probabilities of a potential rejection to the upside away from this level. So if we will have a correction to this zone, what would I expect? Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market at that point, I wouldn't be surprised to see a potential rejection to the upside away from this area, completing this daily impulse correction and impulse pattern to the upside. That definitely wouldn't surprise me. Now, all these general analysis, tutorials, and concepts that you see me speak about on my YouTube channel are really just the tip of the iceberg, because if you really want to learn more, I will definitely suggest that you go and check out the transparentfxtrading.com website, which you find also linked in description. Here, you will have the possibility to gain access to all my courses. So really complete courses that will guide you from the very basics of charting all the way up to more advanced concepts like building algorithmic trading strategies using quantitative finance tools like the quant analyzer to build portfolios of strategies, and a lot of really important and really interesting things that you need to know if you want to become a better trader. So this is something you really cannot afford to miss. You also have the possibility to gain access to the trading station software with the Telegram notifications integration, one-on-one mentoring directly with me, the COT data software that you often see me use on the YouTube channel, and you also have the possibility to integrate with gaining access to all my EAs, so my personal EAs, the ones that I have developed and that I trade on my own account, and also to have access to the trading show, which is essentially a live stream of all trades coming from my account directly on the Telegram channel as they are executed and managed. Here on the website, you will see that there is the complete presentation of all the EAs that I personally run. And if you continue to scroll down, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the checkout process. And there is also per time slot the special discount. So at the moment, there are 10 days before the next price increase. So I would really suggest that you go and check it out as soon as possible. The link is in description, and I will see you in it. If you enjoyed the video, make sure to drop a like, and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.